Well, so topic of the day is insurance web aggregators in India. Insurance web aggregators in India. So the main reason behind the introduction of insurance web aggregators in India was to teach people and make them privy to the assorted insurance products. Earlier, people were accustomed to consulting insurance agents before buying any insurance policies, against which agents accustomed to charge a high commission. Therefore, the idea came up with the concept of introducing a transparent, digital, and highly regulated platform to minimize the malpractices of charging unnecessary commissions by insurance agents. So, an insurance web aggregator, among its all functions, collects, assembles, and maintains the data of various insurance products offered by various insurance companies, and sometimes referred to as an insurance agency. Cluster group is an insurance intermediary or insurance firm that has information on insurance provided by the different firms. So all the data collected by the net aggregator is created, available on its online portal for straightforward accessibility by the consumers seeking insurance services. So by this, the consumers would be able to seek quotations from different insurers by just logging into one platform. The primary functions of insurance web aggregators are to present the name, cost, and description of the insurance products, compare between different insurance products, helping customers choose the policies best suited to their needs, assisting within the process of the sale of insurance policies, and saving customers time by providing the most information on the platform. The insurance regulator has framed the regulations regarding license to web aggregators, because the function of the online aggregators are administered by the regulations enforced by the IRDA. The concept of insurance web aggregator is additionally governed by the provisions of the Insurance Act 1938. For the Insurance Regulatory and Authority of India, Development Authority of India, the Insurance Web Aggregator Rule 2017 were framed by the IRDA. There are certain benefits of utilizing the services of a web aggregators, and these are easy comparison of many policies sitting from one end, contacts with every service provider without any personal meet, save the hustle bustle and time for traveling and other inconvenience, gathering information for insurance policies and products. Every insurance provider, such as banks, NBFC, etc., competes in a fair market.
सर ये रद्दी में के फेंकने ये तुमने दरवाजे में पे ये फेंकने के मन में
So the applicant must be the person for obtaining the web aggregator's license. Certain requirements are there. The company was formed under the Business Act 2013. Limited liability partnership firm incorporated as per the provisions of the LLP Act 2008. The partners must not be non-resident Indian and someone who is resident outside India under the Exchange Management Act 1999, or the other individuals who is recognized as an online aggregator. So the MOA and AOA, Articles of Association and Memorandum of Association, should be the most objects of the online aggregator business. The applicant must not be engaged in other business aside from the net aggregation business. The applicant must make sure that he is not registered as a broker, corporate agent, microinsurance agent, TPA, surveyor, loss assessor, or insurance marketing firm, or other insurance intermediaries. The applicant must have a referral agreement with the insurer. The applicant or any of the entities of the applicant would be only granted one certificate of insurance intermediation. If any of the entities are engaged within the activities of insurance intermediation, then applying for an internet aggregators license would be determined to support the merits of the appliance. So the applicant has a website for insurance web aggregation. The principal officer appointed must possess the qualification and skill prescribed by the IRDAI. The principal officer has undergone the required training and passed the examination required by the desired authority. The key management executives like directors, shareholders, other principal officers have undergone the fit and proper criteria test in Form D. So the authorized verifier has skilled the prescribed training and passed the examination conducted by the desired authority. The insurance web aggregator has not violated any obligation which are as per Form 5 and 10. So the authority has not withdrawn the certificate of registration of the insurance web aggregator license, and the applicant company must not have withdrawn the appliance for obtaining an insurance web aggregator license within the previous financial year. As far as capital requirement is concerned for insurance web aggregator, minimum capital required is 25 lakh. If applicant is company, capital shall be in form of equity shares. In case of LLP, share of partner shall be in form of cash. Shares issued shall be always unencumbered. So, the shares of the net aggregator held as capital must not be pledged in any manner to secure credit. And within the case of an LLP, the partner's capital must only be within the type of case. Where the insurance web aggregator could be a company keeping with the Business Act 2013, the capital must be in the form of equity shares which are issued and subscribed. Additionally, the net worth requirements is also there. Net worth must not fall below 100% of the capital requirements. The insurance web aggregator must review the status of the online worth every half year as of 30th September and 31st March per annum and report non-compliance if any. So this must be done to the authority within 15 days and restore such requirements within 30 days afterward and ensure compliance to the authority. If the insurance aggregator cannot maintain the worth after 30 days, then the business associated with the aggregator should be stopped. So net worth certificate should be submitted once a year, which is certified by a comptroller. Procedure for obtaining license of insurance web aggregator is very simple. Because first the applicant has to furnish application, then prescribe document and fee, then meet the eligibility criteria, and rejection of license application could be there, but then furnish additional information, and the regulatory authority will provide the license. So, the applicant need to fulfill criteria and requirements. And if the authority feels that the registration would be within the interest of the policyholders, then the authority would grant the certificate of registration in Form E. This might be granted for the applicant to function as an insurance web aggregator. The certificate of registration would be issued when the applicant satisfies the code of conduct laid down by the authority. The authority has the ability to reject an application that doesn't fit the conditions of the IRDAI. Just in case of any omission or failure, the authority will grant a period of 30 days to the applicant company to rectify all the mistakes before it rejects them. A brand new application for the certificate of registration will be made only after 1 year. So this is able to applicable just in case of the lapse of the certificate or the authority has refused to grant the certificate. Documents required by authority are certificate of registration of the corporate or LLP as issued by the ROC, MOA and AOA of corporate or LLP agreement, copy of PAN card of the company, profile of the director partners of the corporate or LLP, profile of the principal officers together with the tutorial qualification certificates, a brief preview of the contents of the website proposed for license, details about the hosting place of the website, details about the responsible persons for the website content, net worth certificate and shareholding, audited finance for the last 3 years, organization chart with various designations, etc. Thereafter, validity of license of insurance by aggregator would be for 3 years from the date of the problem. A minimum of 30 days before the expiry of the amount of 3 years, the online aggregator must get the license renewed by filing an application together with a fee of 25,000. So that way, the license can be obtained. Now, as far as the function is concerned, functioning of the web aggregator is concerned, this is important to understand it. Means, IRDA in a Gazette notification dated 30th April laid down the rules for insurance web aggregators in 2017. So, thereafter, certain changes were made, like allow all kinds of insurance products to be sold on the web aggregators portal. Earlier, unit-linked insurance plans were not allowed. Then the ticket size of the policies that can be sold has been increased to 50,000 to rupees 1.5 lakh, giving a flip to bundled life insurance policies. And the rules now allow remuneration even on zero commission policies, such as online term plans through rewards. So, classified as insurance intermediaries, web aggregator are portals that help you compare and buy insurance products. They further improve the purchase experience by either directing you to the insurance website or helping you through the sales process. The primary role of these portals is to enable comparison. In that sense, they provide a listing of products and showcases comparison on parameters such as eligibility criteria, sum insured, and premiums. So, as per the rules, web aggregators need to display product pricing that is inclusive of all taxes. Further, the rules prohibit web aggregators from displaying rating, ranking, endorsement, or best-selling insurance products. They are also to refrain from commenting on insurers or their products at any locations in their websites. So, web aggregators have played an important role in boosting the online market for several products such as term plans. Comparison is essential for that the customer and in case of online products, over 90% of the customers compare and buy them through web aggregators. And now with the changes to the rules, one can expect that ULIPs too would get a boost online. A few insurers already have ULIPs online. Investment products have not been popular with the web aggregators because the regulations prohibited from selling ULIPs. and the traditional investment products are complex, making them unsuitable for online sale. But now, companies are selling ULIPs, and given that ULIPs are becoming popular once again, this is a welcome move. So what would further help aggregators is the hike in premium ceilings set currently. Currently, web aggregators are not allowed to solicit insurance policies where annual premium exceeds rupees 50,000. But as per new regulations, the new limit is rupees 1.5 lakh. The life insurance policies qualify for a tax deduction of up to rupees 1.5 lakh under Section 80C of the Income Tax Act 1961. So the earlier limit of rupees 50,000 was very low, but now the tax limit is covered. So all investment products up to the full tax limit will be available through the web aggregators. Thank you very much.